How's it going, everybody? I want to do a quick review and a video over how I frame my setups every single day. And this is all ICT innercircletrader concepts. And I really just want to make the video to maybe help somebody out there that doesn't know how to frame their setups, just to kind of keep everything organized. I definitely have OCD when it comes to these charts, so I definitely want to have everything in order. Um, some people, are a little less organized, and everybody's different, right? So this is just personally me. This is the micro E-mini NASDAQ futures contract, and this is from December 28th. I'm just showing an example, something that I personally took a demo trade on, again, because we were in the month of December going into January. I don't trade those times. ICT talks about it a lot. I really just wanted to show a market maker sell model, and I wanted to show how I frame my setups each day. So let me make this visibility not on the hour, clean things up a little bit. Every single day, I always put these two lines, and you can have the session indicators on. Just personally for me, it just makes this a lot more organized. So I always have it from midnight Central Time to 5 p.m. Central Time. So this is the true day open, and then this is the close of the day as well. So we can see here, let me put this as well. Okay, so this is the Asian range. What I like to do, just to keep things organized, I don't like to have the indicator on. I believe you can just look up kill zones. It should be on there. So this would be our first standard deviation, and you can use standard deviations. You can find it on ICT's YouTube in a whole bunch of different ways. But really, they're just to project the daily range and a potential target for you, and potentially where Judas swings can happen. At least from my studies I've seen. Okay, so what I'm doing here, obviously this is hindsight, but this is -1, -2. So you're projecting the Asian range, negative standard deviation 1 and 2, to see where the Judas swing would potentially happen or form at. And I'll go on the 4-hour time frame to show you this order block that we are looking at. Okay, so the next thing I would do, and I always do this because I don't know 100% of the time where the Judas swing is going to happen or where the daily price range will obviously end up. So I will put, because I know now where price went, I'll put +1. Okay, +1 here and +2. Okay, now what I can do is I can actually take this off, and now it's neat and organized. Next thing I'll do, depending if I have space, is, and this is not necessary, I just like my charts to look like this. Okay, true day open, and what I'll do is I'll actually turn this white and then send it to the back. Okay, that way it's a little more organized. And then I can do the same thing here. True day close. I'll actually put that, actually we'll put it on the outside. Same with this one. Okay. Next thing I have is the daily open, so you can get the indicator daily open just to help you find that. And for me, if I'm looking for a short, I want to have, power of 3, which is the low of the day, high of the day. I want to figure out where the higher low is going to be formed. Obviously, that's going to be above or below the daily open. So if I was looking to short, I want it above the daily open. And then the 6 a.m. open also helps to find where potentially price is going to go. This really only works on futures and indices, so don't apply that to Forex. Okay, now this order block derived from a 4-hour time frame. Okay, right here. Now, why is this an order block? We have a fair value gap coupled with the last up close candle before this price leg ran lower. Okay, so this makes it a high probability order block. Okay, especially after we took out all of these buy stops that were resting above here for a good amount of time, since November 30th all the way till almost a whole month. Okay, so that's a significant amount of buy stops, people that are selling above that, and all we did was we ran into that. And then if we go back to a 5-minute, we can see exactly where we were at. Let me actually go down to a 5-minute or 15. So what I had marked up here on a 5-minute, let me get rid of this real quick. Okay, so if we were looking at this pre-open, which is 8:30 Central Time for me, I was looking at this, I actually took a demo trade because this is, obviously a terrible time to trade. We had original consolidation, accumulation, reaccumulation, smart money reversal, plus the turtle soup, and then we decided to break down lower. Normally, I don't take trades before the 8:30 open because I want to see where price is really going. But I ended up taking a trade inside of here because there was a lot of high probability with this. It was right around 7:30 or something. Yeah, 7:40. So price had the turtle soup, broke down, returned to this fair value gap plus this breaker, right? Because these last down close candles were the last up, down, and then we returned into this fair value gap. We ended up breaking down. Okay, so with market maker, sell, or buy models, they usually just mirror each other. Okay, so you really want to see symmetry between these two. So we have the buy side of the curve, and then we have the sell side of the curve. And we want to see where there was old buying, we want to see selling, new selling, right? Same thing here. Right where reaccumulation happened, there's distribution that's happening right here. Okay, so if we play this out, okay, this was 8:30. And the reason why I've taken a real liking to futures is just because the 8:30 open always gives me a high probability direction, or I can just smell out whether that's a Judah swing or we're just going to have a choppy day. So if we go out to a 15-minute time frame, what I wanted to point out as well, inside of this 4-hour order block, there was a 15-minute order block that once we closed here, came up, retested it. We didn't quite get there, but that was because of this 15-minute bearish breaker, right? Now, if we were looking to enter on the 8:30 open, knowing all of these things, we could have looked at a number of things, right? Could have looked at this fair value gap, which would be something in mentorship I can't say. We came up, and if you look at fair value gaps on how to use them and whether they're going to play out, always look at the bodies and how they're closing. Just because the wick ran through doesn't make it invalid. Okay, if you look at the body and how we ended up closing, it was beneath it, right? So we could have used that as a PD array to short and target these equal lows that were resting beneath. I believe this was Asian into London session, right? And this was overall what it dropped. Let me see. From this 4-hour, if we were entering, let's just say off of a higher time frame, it was about over 100 points, which is amazing. Now, let's say we missed all this, right? And again, this is hindsight. But after this price leg ran deeper, if we know on a higher time frame that we're bearish, just because we took out one level of liquidity, there's still levels of liquidity that we can go ahead and target. So the next thing I would look at that formed is this 5-minute order block. Okay, why is it an order block? Because it was our last up close candle coupled with a fair value gap, right? That makes it high probability. Okay, so if we mark this out, since we took out this level of liquidity here, if I get rid of this for a second, and we play this out, okay, if we were looking to go short of this order block, our next level of liquidity would be here, right? Because now there's going to be sell stops resting beneath this. So what I would do is I would actually drag that over to this line here. And now I have a target. Okay. And if you go on a higher time frame, you can, obviously use fair value gaps or, any sell side resting beneath. And you can also use the Asian range standard deviation to target that as well. So if we were looking to short here, I'd be looking to short at this fair value gap plus the order block. And if you also take the range high to the range low, okay, you can do body to body or wick to wick. We can do body to body here. Okay, this is an OTE 71. Okay, we're going to be above equilibrium, which is going to be in a premium. And then we look at to short beneath this low. So if we play this out, price ran up into it. It's right around 9 o'clock. What I've seen with futures and indices, at every half hour, so 8:30, right, price opens and dumps, and then right around 9, we're going to get another reversal or continuation of what the initial move from the 8:30 open was. Okay, you can see here that only took about 15 minutes to happen. And if we were shorting this, so if we framed it up, we'd have our stop above here, which is right around 25 points to target 61 points. So it's about a 2 to 1. And then we could potentially obviously look lower for any targets. If we really wanted to go to this standard deviation, that's about 121 points. Let's see, I don't actually know where it played out to. Okay, and this is the whole point of taking profits and paying yourself. Because most people, or even myself, when I was first trading, I would be looking to hold this and not taking any profits. And you're, up 61 points, which is a significant amount of money. And, this would come back to break even and I'd get mad. I guarantee you this was just a reclaimed order block that happened. I'm actually not sure. Let me play this out. Yeah, so if we look at the close of the day and then look at the standard deviation, it's not 100% accurate, but I mean, to call that 6 points away from the close and predict that from, just the Asian range before London even happened is pretty significant. So I hope this has helped in some way or form. I'll be doing more videos over the next kind of couple months, just forecasting and, what I see. So appreciate it.